6 o'clock. Everybody call in your meeting to order. We got minutes?
Make a motion, we approve them.
Got a motion, got a second in discussion. All in favor say aye.
Aye.
Our minutes are approved. Anybody want to make a comment, public comment? Chris?
I've said my
Thank
spiel.
you, Chris, very much.
I've said it from here out.
There we go.
We all put up or we all see it?
Where are we?
Right to the camera.
Okay, let's, you got an issue.
Yes, sir.
And we probably need to talk about where we're on with everything too. So go ahead, sir.
Yeah, before we get into that, this is on the work comp and PC side, PNC side. This is not on the health side that we're looking at right now. Every year, we go out to bid. We went out to bid this past year, and so we went through some bad claim years a few years ago where we had a high experience modification, which basically drives your premium up, et cetera. And due to good work by a safety committee that was put together, and Judd and people across the county, we got the experience mod down, so we had a little bit of extra money going in there. But the premium this last year went up $400 and something thousand, and any cushion that we had previously is gone. So it looks like, I don't know if you were gonna pass that sheet out or not, you just gave me
You say it went out, how much?
400,000.
That's
That-
work comp.
Work comp and
Is
PC.
that what we
all
paid
together.
out or is that the premium? So we-
That's the premiums.
Is that after we bidded it out?
That's after we bid it out. There's information here, so some of your bidders here, Travelers, was sent to bid, including work comp. Key Risk only bids work comp, and that's who we're with, that's who we're with. We sent to Liberty
I'm
Mutual.
missing something.
I'm handing that out.
It's
Yeah.
coming, it's coming.
We went to Liberty Mutual, they declined to bid. We went to TMHCC, and the count was declined because of gel exposure, they don't do gels. We sent to WC, or to Summit, it was declined as they do not insure police and fire, blah, 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 blah. So, by the way, if you haven't noticed, if you haven't heard somebody tell you that basically their homeowner's insurance has been canceled, you're gonna be hearing that, because now suddenly, for no reason, they're canceling homeowners. We're not gonna say for no
Heard
reason.
it yesterday.
Who is? A particular company, everybody?
Everybody.
Why?
Because they don't like paying money.
More information.
Okay,
I mean, basically, it's come to a point now where they're treating your house the same way they treat you if you're a bad driver. If you have a claim, they cancel you.
okay.
There's no insured drivers out there, it's what's gonna say that.
Yeah, so anyway, this sheet here, if you have it now, we're projecting a 11.3% increase for next year. So we're going from 2.9 to 3.3. So you're talking about another $400,000 increase roughly. So what I'm asking for, and by the way, when we went out to bid, this money is spread out all over all the funds. Some of it's over in the road department, some of it's in the sheriff's department, some of it's in finance. We have it looked at every so often where the premium gets divvied up over the various departments based on the amount of equipment and buildings.
Is that pro rata then?
Correct. Yeah, but we're short. We've also had some claims in addition to the 400,000 that we're talking about. So what I'm asking to do for this year is to take 500,000 from interest income in 151 and move it into 266, just to get us premiums paid and claims through the end of the year, so we end cash flush. Now, we've got $13.5 million in interest income through March. You've still got April, May, and June to go. Is this gonna break the bank? No. Is this something I'm particularly excited about doing? No, but we gotta pay the premiums.
Now, is this interest from the CDs?
Interest from everything from bank accounts to CDs to, yeah. And it's interest, I mean,
And we have how much total?
right now you got 13.5 million. Understand that you've got, 84 million out there that you're earning interest on from a multi-level court building.
Right.
You've got 50 or 60 million out there on elementary school. I don't remember the exact amount. So, I mean, I don't look at that money as being
Right, I
a
understand.
long-term solution to problems,
Right.
but
Non-recurring.
not reoccurring. But it will get us through this.
Are you showing a million here?
No, sir. 500,000 increase in the budget to interest earned because we only budgeted 2.5 million, and a $500,000 increase to the premiums. The contribution is going over to 266. 266 is not a budgeted fund.
So the interest is 500,000,
Correct.
and the contribution coming from where?
From 151 going to 266.
Okay.
So it's an increase to the revenue and an increase to the expenditures is why it shows.
Okay, I got you, I see what you're saying.
But the total is $1 million.
Total's really 500,000.
Yeah, the 500,000 is the total, it's going one place and coming from somewhere else.
We shouldn't, okay.
Is that normal to put this total?
It is now. It is now.
Didn't used to be, right?
Didn't used to be.
And what's today though, right?
Yeah.
We're not decreasing something, we're increasing both.
Increase in both.
Okay.
But you're increasing the revenue and expenditure. So it's not a million, even though I know that's what it says.
Well, I went to elementary school at
Yes.
McLean, and that looked like $1 million to me.
Yes, absolutely.
Chair, entertain a motion.
Make a motion to approve the,
We have a motion, do we have a second?
Second.
Do we have further discussion? No further discussion?
Just one question.
Yes, sir.
How often are we gonna have to do this kind of thing? Do you know? You have any
Well,
predictions?
I've got some potential things that I want us to look at, or a potential thing that I want us to look at that Judd has kind of started for us in terms of, what would it take for us to potentially take some more risk on that side, sort of like we're self-insured on the health insurance side.
Right.
What if we took on higher deductibles and whatever else to sort of try to drive the premium cost down? That's something that I want the committee's, blessing for. Judd has kind of started looking at that, trying to find the point where, that makes sense.
Back to the sweet spot.
Yeah,
threshold.
yeah, yeah, exactly.
Okay, got a motion on the floor. Any other discussion? All in favor, say aye. Aye.
I don't know, Judd, if what you passed out includes what the next item, because it's time for us to do another revaluation of buildings. Every 5-6 years, we have to revalue, as y'all know what's happening with real estate prices. You have replacement cost insurance. You can't let your buildings get insured for too low value. So,
And I do have information on co-insurance and penalties, and I'm gonna hand that out right now. If you'll take one and pass one around. And I've got some notes here to talk about the appraisal and why we need to do it. It's to avoid any co-insurance penalties. And I want to talk about total insured values and some things that are pertinent to the appraisal process, and sort of what we're looking at doing with that.
You have anything else? Aaron, you ready to judge?
I'm ready for him to go now.
I said, okay, go judge.
Okay. Right now, the county, when you look at these premiums
Mhm.
that you're looking at on your spreadsheet, right now, that represents a total insured value of $210 million of property. You've got 27 locations, Wilson County government owns over 27 locations valued over $1 million apiece. So we're recommending that that is our appraisal point. So anything $1 million or over will be appraised. We're recommending that we go with the appraisal company that did the former appraisal, and I don't know how many years ago that was. It's been that long. And you guys know property values, building materials. The other information I handed out to you is sort of a trend history on commercial insurance and why rates have gone up 20% 1 year, 18% the next year.
remember,
So insurance for property, there's a reason why it's gone up. it's because of inflation and what everything costs to replace.
So you're indicating on this form, the increase in the property cost reflects?
Yeah, that reflects your premiums. In that second column there are estimates. The renewal is September, coming up September 1.
Right.
And so we've got a projection from Travelers, our carrier. So those are estimates, but we feel like we're gonna land really close to that.
Okay.
And it's broken down. Those numbers show property on the top.
Right.
Then you got your crime coverage, inland marine, general liability, law enforcement liability, management liability, employment practices liability, your auto coverage, which we have, Wisconsin has a large fleet of autos that stay on the road 24/7. You got auto physical damage, umbrella coverage, and then of course workers' comp, which Aaron alluded
What's that
to.
umbrella value? You know,
Off the top of my head, it's like, I hate to quote you.
Yeah.
It's on up
I
there.
mean, 1 million or 10 million?
No, above 10.
Okay.
Yeah, it's a large umbrella. And I just don't have that exact number,
Yeah.
so I won't tell you the wrong thing. So currently, back on the appraisal, we're recommending to start with an attachment point of $1 million. So you've got 27 locations. HCA, I believe, is the appraisal company. So what they'll be doing is updating their former appraisal. And that's gonna be most cost effective as opposed to starting fresh. We're estimating the cost of the appraisal around $30,000. But that's gonna get our values. Every year when we renew the policy, we do an inflation guard increasement. We increase the values of the property every year. But we had a couple of years there during COVID where things jumped 20 and 30%. So we want to make sure we get up. You want to be, within at least 90%. Best case scenario, 80% of the value. You don't want to fall below that. So it's something that needs to be done. So this is the time to do it. Is our recommendation. That could result in an additional $50,000 in premium. You're looking at approximately going from $210 million in total insured values. After the appraisal, it could be well into $360 million worth of property. Once we see the appraisals and the property's values are adjusted to current market.
So the appraisal is the first thing. Get a new appraisal is the first step.
Yes, sir. Yes, sir.
So how do we pay for that, Eric?
Well, usually we would pay for it out of 266. In this case, we may look at paying for it out of capital projects. I don't have a cost figure yet on what it's gonna cost. But we may look at paying for it out of capital
Those
projects.
buildings, that does not include schools,
No.
but we own them,
No,
right? I mean, we finance them.
we have the debt, we don't get the
I
bill.
knew, okay,
All we get is the bill,
even while we're financing.
even while we're financing.
That's a real deal, isn't it?
Yeah.
Go ahead, Judge.
And just to give you an idea of how the county is growing, this year we've added the jail expansion to the policy, and that was a $67 million increase into your property value schedule. So that's substantial, and that did result in a little bit of premium increase. But after the appraisal, we're estimating your total insured values to be at $360 million as opposed to 210 currently. So it does show you do need to get an appraisal with the values corrected to avoid any co-insurance penalties. And shifting, any questions on that?
Yeah, so the building we're building, do we carry like builder's risk on that?
You did carry builder's risk, and then it transferred into, once it was completed, then you roll into your commercial insurance coverage.
So we're, with the new multi-level, we're paying builder's risk on that, but as soon as it comes online, it's gonna be 100 million. I mean,
What we,
it did-
I don't know the exact, it's a
I, well,
large,
what we, if
it's a large number.
what we paid for the jail went up by 20 million
Mhm.
over what we paid for it. So
Mhm.
I'm assuming,
It's a large number.
We're giving Haskell's.
Okay.
So where are we in the conversation? Is this, are you giving us a warning that that's what it's gonna go to, then we gotta figure out a way to pay the insurance, Aaron, is that what we're talking here?
Yeah, it won't be till September that we're
Okay.
renew, and we will go out to bid again. But again, given, I think it's realistic to assume, I wish it wasn't, but I think it's realistic to assume that basically that's gonna be pretty close.
You mean the value here is gonna be pretty close?
Yeah.
So what we're saying is increase in property values.
Increase in property values, increase in payroll.
Yeah, all that, but what you've given here is an estimate, what you think is gonna cost to cover it at the new values.
Yes, sir.
Okay, I just wanna make sure we get that straight.
Yes, sir.
Thank you. Okay,
Because we just
Nick?
put that money in order to pay for that increase.
Yes, sir.
Okay.
What's next?
Next thing is discussion also with Judd, which I mentioned a little bit earlier, the discussion of becoming partially self-insured possibly.
Yes, and we're looking at high deductible options. So we're currently in the process of getting numbers in on that. Just some real preliminary numbers though, looking at self-insured options. And it's not looking like we're at the right size or the right time to dive into that. Just a quick glance, we've done some research and some estimates. If you go to just on your workers' comp, if you go to self-insured on your workers' comp, you're looking at about a $700,000 price tag to start. You've got to do actuarial studies, you have to set up funds to cover claims. And then once your high claims occur, those stay with you for 7 years and you have to fund that out as a liability. And it's really just not the time to take that on. You could go anywhere, your best year, it could be $750,000 and sky's the limit on the worst year. So right now,
Ain't no stop loss on that.
no, sir. It's just it's something that I'm not comfortable recommending you do at this time.
Now, when you say partially self-insured, I mean partially of this list here, right?
Yes, it would be like going self-insured on your workers'
On
compensation.
this one or this one or this, right? It's not
Everything you-
self-insured for the whole thing.
Yes, once Travelers renews their insurance policy with you guys, it's guaranteed cost for that year, so you know what you're spending that year.
If there was an out, and I'm not saying it would save us that much money, okay, but if it would, the reason, my thought process for looking at it is, what is our deductible right now on buildings, whatever, Judd, do you
I
remember?
believe we're at, we just raised it to, I believe, 10,000.
Okay, 10,000. Let's say that we raised it to 200,000. Okay, well, how many buildings do you think we're gonna have hit? 27 locations spread around the county. It's a horrible thing if you get 5 of them hit at one time. But, I mean, the odds of that are low, and you have the capacity to cover it if you did, if it saved you enough in premium. I just pulled that out of the air. That's the
What if
thought
you did
process.
less than that, not 200,000, but it's 10 now, what if we went to 50?
Yeah,
And that's what we're doing. We're working on different deductible
Okay,
options.
I got you.
And sort of see what makes sense,
Mhm.
where you're gonna gain traction and savings,
Mhm.
but not be risking too much, not sticking your neck out too far.
Right.
just, the less risk, the less reward, right? So if you incrementally, if you say, well, let's just double our deductible from 10 to 20,000 from a premium standpoint, you're not gonna see much.
No, not much. But if you go to 50 or you go to 75,
And again,
It
maybe,
may or may not have a lot, but it'll have something.
But you're studying that, right, Judge?
Yes, sir. Yes, sir.
Now,
like, I'm sorry, go ahead.
when they bid on this, when the insurance company, Travelers comes in, this is what your estimated will be, it could be less, it could be more. And that's when you're gonna work the deductibles up and down.
Yeah,
And see what else we can do.
yes, and then we work them over pretty well too.
Well, I know.
We go back and forth with them, and Travelers has been a good partner, a long-term partner. They've paid a lot of claims, and they're really good about that. So, and as you see, the bid process last year, all the companies that were approached and for one reason or the other, they're listed there why they declined.
Is this is the line of coverage a one-stop shop? That we can't piecemeal it out, bid it out to different companies, or
We have it with more than one now in terms of key risk is covering us on work comp. Travelers used to have all of it, but they lost the work comp part to key risk.
that's okay.
And Mike, we do look at other carriers, like our cyber coverage is with HCC Tokyo Marine. They have a better coverage for broader coverage. So, and we save some money on the premium. And we did that through the bid process. So, so to answer your question, yeah, and we do that.
Aaron, you got another item there?
Just under new business when we get there, that's really the end of the stuff that's on the agenda, but I did have one thing under new business.
Okay, go ahead, sir.
So I met with Sheena Sloan. She asked to meet with me. She came Friday morning, and if you don't mind, I will just read the letter. This one is actually, sorry, Colonel, this one's actually yours. I haven't handed it to you yet, but they're the same. as the one I
That's
did.
a violation of
It
state
is,
law.
it is, yes, sir, it is. So from
Stamp, so it doesn't matter.
From Sheena Sloan, we wish to express our appreciation for the opportunity to work with the Insurance Committee over the past 13 years as operations management for your Wilson County Employee Clinic. The assignment has been personally and professionally rewarding one for both of us. Wayne O. Wells, MD, as you know, retired from his private practice in August 2022 after more than 35 years. He has continued to serve as our medical director and see eligible Wilson County employees at the clinic. While this has been very rewarding, the time has come for full retirement. Sheena Sloan, partner and COO of Health Resource Integration, retired from private practice in August of 2022 after 37 years of medical management. While both of us are still in good health, both mind and spirit, we feel it would not be in the best interest of our patients and the Wilson County government for us to continue the daily management of the clinic. We would not want to leave you with only a time to secure an appropriate management group to care for your eligible employees and their covered family members. Pursuant to the terms of the management contract, 90 days written notice, consider this communication official notice effective August 29, 2025. Health Resource Integration LLC will terminate the contract with Wilson County government for management and operation of the Wilson County Employee Clinic. This date allows for 30 extra days for the search.
We talked about bidding it last year.
Could be slightly more flexible if necessary. We anticipate smooth transition. Smooth transition is extremely important in order to retain the patients who do use our clinic and help reduce county medical coverage expenses. We would like to request current employees who wish to remain in place in the clinic be allowed to do so. We have been more than blessed with extremely qualified, knowledgeable, caring, and conscientious employees over the years. The current team is no exception to that blessing. They have been with us for many years and have served your employees well. We trust it will be possible for them to continue offering that same service under new management. Thank you so much for the opportunity to serve Wilson County in this capacity. We will be available if needed to assist you in your search for replacement. I have asked Sheena just to, work with us on the RFP, which really we have one in place from last time, but,
Did you pass the letter down to them?
yes, I do think that, retaining the employees if we can is a good idea.
Absolutely.
I would not say anything before today, because, when she came and met with me on Friday, she had not yet notified her employees. In fact, I said I wouldn't say anything until actually tomorrow. But since we're all here at an insurance committee meeting, seems like an okay time, and I'm sure she informed them today. So.
John?
Yeah, if you have RFP and you put it out,
Mhm.
and you get a company coming in,
Mhm.
you know, as much as we'd like to retain the employees,
Mhm.
it's not always going to be possible.
Yeah,
So I think it'd be careful not to promise something that we may not be able to deliver with a new company.
That could be part of the RFP too.
Could be part of the,
Willingness.
you could
Yeah.
put it in there.
I think, look, one of the reasons that we struggled when we were with the previous group was because there was no continuity of care. Because when the employees went over there, they didn't know who they were seeing. They
Exactly.
never developed a relationship.
They have that now, that's,
They-
we
they
got to
have-
preserve
Now,
that
if we
for
put
all
it in the
possible.
RFP, that would be great,
Yeah.
because that may be a
It is,
positive for someone that comes and wants to do it.
it's a crucial piece of trying to get people to use the clinic, that they feel comfortable, that they're not seeing some new face every time they walk in.
How many employees do we have over here?
There are, so there's a practitioner and a nurse. Now, I think there's maybe 4 practitioners that rotate, at least 2 nurses. So,
Do we have one east and west?
we just have one here.
It's one.
It's the only one.
The
Because
school
again,
has multiple.
when we started sharing with the school, there was all sorts of problems. Again, previous company, never knew who you were gonna see. Very difficult to get an appointment because you've got their 2,500 employees, along with our 900 trying to get in, hopefully that day or the next day. There were just a lot of problems trying to, coordinate and share a clinic.
Do you, either one of you object to me saying some, mentioning where we are with Vanderbilt and our meeting with the mayor's office over there?
I have no objections, sir.
Our bill went up about $2 million a year with Vanderbilt for the last 2 years, basically, per year. And I was lucky enough to find a person that's retired that could do a comparative analysis on Vanderbilt versus HCA Summit. The Summit getting pretty big footprint here. To my amazement, Vanderbilt is a little less expensive than HCA is. So, wearing 2 hats, being here and on the board, I pick up bits of information and I found out that they're upcoding some charges. You can leave us out of minutes. Upcoding some charges, and some other things. Too many people being shipped downtown, basically. We here downtown, do they go downtown?
Are we talking employees, or are we
We
talking?
talk about.
Hold on just a second, Jerry, I just remembered something.
Sir?
We haven't said anything right now that we don't need to say, but there was an NDA, so probably the best thing we should say right now is nothing.
That's
Sorry.
important.
Sorry about
Remember.
that.
That is true.
Yes. My apologies.
You're correct. That is true. I will just say that we are researching and
Yes.
there may be a new carrier, there may not be a new carrier. We don't know. But there's some stuff that's, you know, like, got moonshine still, it's forbidden. There's some things that are forbidden out there at the moment. So thank you for reminding me.
I'm so sorry, I didn't think about it off the top. My
But
bad.
at any rate, there's some things that's happening out there that may save us some money in the future. May not. We'll just have to wait and see.
But that doesn't have anything to do with the clinic, correct?
No, sir.
That doesn't have anything to do with the clinic, but it all comes out of one pot some point in time. Okay, what other business we have for the committee? Aaron? Good?
I have none, and I thank you guys for your patience with this. Insurance is a tough thing right now on all sides.
Motion to adjourn?
I'm available, anytime. If you guys have any questions, feel free to give me a call at the office or on my cell phone. And this is priority number 1, of course. So constantly working on this. It's a daily activity for me, and I appreciate y'all's support and confidence in me. Thank you.
Thank you for what you do. We stand
Motion to
adjourned.
adjourn.
Stand adjourned.